Now we discuss about adjustment in final accounts. Adjustment in final accounts means the adjustments are given in the below the trial balance. Below the trial balance. The adjustment must be effective in two accounts or two statements, any two statements. Either trading account or balance sheet, either P&L account or balance sheet. Every adjustment must be recorded twice. One is debit account, one is and a trading account, another one is balance sheet. One is and P&L account, another one is balance sheet, whatever it may be. So every adjustment must be recorded twice. This is remember one thing. In trial balance aspects, only record once, either trading account or P&L account or balance sheet. This is remember one thing. Okay, suppose the closing stock is given in the adjustment. First you have to write credit side by closing stock. The same amount must be recorded on asset side. The same must be recorded on asset side. This is the first one. Next, second one, outstanding expenses means payable. If any expenses is related to trading account, that should be add to respective expenses on debit side. Suppose wages. Wages are recorded in trading account debit side. So, if any outstanding wages, it should be added to debit side to wages. To wages. This is about wages. The same wages must be recorded in liability side. This is the one. Suppose the expenses is related to P&L account. Example, salaries. So, salaries must be added in P&L account debit side, P&L account debit side to salaries, outstanding salary. Salaries, add outstanding salary, debit side. This is the first one. The same outstanding salary amount must be recorded on liability side. Must be recorded on liability side. This is the another one. Prepaid expenses means paid in advance. Paid in advance. It must be, suppose the wages paid in advance and we are deduct from the wages. We are deduct from the wages on debit side in trading account. The same prepaid wages must be recorded on asset side. Must be recorded on asset side. First, deduct from the respective expenses, either wages or carriage, whatever it may be. Those are recorded on trading account debit side. So, prepaid any wages is there, it must be deduct from the wages debit side. The same amount will be recorded on asset side. Suppose prepaid insurance. Prepaid insurance. Insurance must be recorded on P&L account. So, prepaid insurance must be deducted from the insurance debit side in P&L account. Debit side in P&L account. And what is the deducted amount prepaid insurance? The same amount will be recorded on asset side. The same prepaid insurance amount must be recorded on asset side, balance sheet. This is the and another one. Next, accrued incomes. Accrued incomes means income to be received. Income to be received. All incomes must be recorded on P&L account credit side. So, the accrued incomes, income to be received must be added to respective incomes on credit side. P&L account credit side, suppose interest to be received. Interest to be received must be added to interest, on credit side, What is the accrued incomes portion? The same must be recorded on asset side. What is added? Accrued incomes, the same amount will be recorded on asset side, accrued incomes. This is the fourth one. Next, income received in advance. Just like interest received in advance. Interest is income. So, already sum of the portion and received in advance. So, the interest, deduct from the interest first credit side. Deduct from the interest on credit side. The same and income received in advance must be recorded on liability side. Income received in advance must be recorded on liability side. This is the fifth one. Next, depreciation. Depreciation is a loss. If depreciation is given as a percentage, given as a amount, whatever it may be, it must be record P&L account debit side to depreciation. P&L account debit side to depreciation. The same depreciation amount deduct from respective assets. Example, machinery, depreciation from machinery. So, depreciation on machinery and record on P&L account debit side. The same amount, depreciation amount must be deduct from the machinery. So, machinery is asset side. So, machinery depreciation must be deduct from the machinery on asset side. This is the sixth one. Next, seventh one, interest on capital. Interest on capital, if given in adjustment, first P&L account debit side you have to write interest on capital. Liability side, add to capital. What are the interest on capital? It must be added to liability side to capital account. This is the interest on capital. Interest on drawings. It must be record P&L account credit side first of all. By interest on drawings. Liability side less from capital account. This is adjustment. The remaining adjustment will be C. Come to the first one, bad debts. Bad debts means amount is not recovered from the debtors. It is called bad debts. If any bad debts is given in the adjustment, means below the trial balance, it must be record debit side, P&L account debit side by bad debts. The same amount must be deduct from debtors asset side. What is the bad debts? The bad debts amount must be record P&L account debit side to bad debts, deduct from debtors asset side. This is the first one. Next, provision for bad debts, provision for doubtful debts, whatever it may be given in the adjustments. First you have to write P&L account debit side to bad debts, provision for bad debts. It must be deduct from the debtors asset side. This is the first one. Provision for bad debts is given adjustments. Reserve for bad debts given in trial balance. In this case, provision for bad debts is given in adjustment. It must be recorded. P&L account debit side, PBD, provision for bad debts. This is given adjustment. P&L account credit side, reserve for bad debts. It is given in the trial balance. So, trial balance, reserve for bad debts, provision for bad debts must be credit side of the P&L account. What is the provision for bad debts is given adjustment. It must be P&L account debit side, PBD, provision for bad debts given in adjustment. The same PBD must be deducted from debtors. Provision for bad debts must be deducted from the debtors. No need to deduct reserve for bad debts, provision for bad debts given in trial balance. It is the remember one thing. Only confusion is there. PBD and we must always P&L account debit side deduct from the debtors. If only given in single PBD. Either given both and PBD given in the adjustment and reserve for bad debt given in the trial balance, both are given at the same time. That time and PBD must be recorded on the debit side of the P&L account, deduct from the debtors. Reserve for bad debt given in trial balance, it must be recorded on credit side. RBD, reserve for bad debts. No need to deduct from the debtors. This is the remember one thing. Only given PBD, it must be record debit side, deduct from the debtors. If given PBD as well as RBD, both are given. One is given in adjustment, another one is given in trial balance. That time, first record PBD here only and deduct from the debtors. What is given in the RBD in trial balance, it must be recorded credit side by RBD trial balance. No need to deduct from the debtors. This is the about and provision for bad debts and reserve for bad debts. Next, discount on debtors. If any discount on debtors is given, P&L account debit side to discount on debtors, it must be deduct from the and after PBD, bad debts and asset side. And if any bad debts is there, any PBD is there, after deduct, then only deduct discount on debtors. Then only deduct from the debtors, discount on debtors. This is the and about discount on debtors. Discount on creditors. P&L account credit side by discount on creditors. The same amount must be deducted from the creditors liability side. The same amount must be deducted from the and creditors liability side. Next, loss of stock by fire insured. Insured means they are taking the insurance policy on stock. First, what is the loss of stock? The total amount must be right on the credit side trial balance by abnormal loss. Suppose the loss of stock by 10,000 rupees. This 10,000 rupees must be total amount by abnormal loss account or goods destroyed by fire, whatever it may be, right in trading account credit side. What is the actual loss means? The total loss is 10,000 rupees. 5,000 rupees and claim from insurance company, and between this is the 10,000 rupees loss, this is the claim 5,000 rupees. What is the difference between 10,000 and 5,000 rupees? And 5,000 rupees is actual loss, 10,000 minus 5,000 rupees. This is the actual loss. The actual loss must be record on P&L account debit side means, and what is amount is not recovered from the insurance company, the same amount will be called actual loss. Actual loss must be recorded on the debit side of the P&L account. So what is the amount insurance claim? Insurance claim in asset side you have to shown in the balance sheet. This is about and loss of stock by fire. Goods withdrawn by owners. Goods withdrawn by owners. Owner is taking for personal use. And what is the goods value is taken by the owner? It must be deduct from the purchaser's debit side in trading account. Deduct from purchase debit side in trading account. It must be, remember one thing. Same. And what are the goods are taken by the owner? The same goods value must be deduct from capital. Must be deduct from capital. Goods withdrawn by personal use by the owners, it must be deduct from the capital account liability side. This is about and final account adjustments or adjustments in final account. This is about. So, and remember one thing, the trial balance transactions must be recorded only once, any one statement. Adjustment transaction must be recorded twice in any two statements, either trading account or balance sheet, either P&L account or balance sheet, either sometimes only in balance sheet, whatever it may be, it is depend upon the transactions. So, every adjustment must be verified after completion of the solve the problem, then after and total them, and each and every transaction must be recorded either trading account or P&L account, trading account or balance sheet, P&L account or balance sheet. The trial balance each and every one record in trading account or P&L account or balance sheet, whatever it may be, verify. Then after and total them and one by one first trading account and next P&L account, next balance sheet, and it is easy step. So easy, no confusion. First of all, verify each and every transactions and read the problem thoroughly. What are the adjustments? What are the trial balance transactions? And then only easy to solve the problem. This is about final account adjustments.